What's going on, trade pros? This is George from TRADEPRO Academy. Today we're driving home from the office. It's Friday. It's around almost 4 p.m. Decided to take off a little bit early. Got caught up in some traffic. But on this drive home, we're going to have an opportunity to talk about something very important. Today, I'm going to talk to you about how to avoid losing trades before they happen. There's a process that we could use to minimize or reduce the number of losses that we're taking in any given case. And as long as we follow the process, it could help us out by improving our win rates and also helping us qualify better opportunity trades. Let's jump right into this video. All right, so let's talk about this process. What I call this is disqualification of a trade. So we know that we have to create a trading strategy as traders. We know that we have to have a tactical, disciplined approach. All right, and we have this understanding that we gotta, be disciplined, be patient, treat it like a profession, have a plan, and really be on board with that plan and wait for it to happen. But what's more important is actually exiting a trade. Because if you think about it, the profit or loss is crystallized or created at the time of exit. At the time of entry in a trade, we're very excited, we're very opportunistic, and we have a focus of, we can find a trade because it's going to make us money. But exiting the trade is the hard part because, number one, if you're on a trade that you're up, you could say, you know what, I could make a lot more money, why don't I stay in it? You get greedy. Or you could say, I'm down a little bit, I might as well get out before my stop losses hit. That's getting out because of fear. Either way, the exit is the most important part of the trade process. So here's a way for you to manage your exits. As soon as you enter a trade, you have to have entered that trade for a reason or reasons. These are called your qualifiers. These qualifiers are often part of your trading plan. So if you're trading futures, if you're trading stocks, whatever it might be, there are a series of things that you want to see in order for you to qualify a high opportunity. The reason qualifiers are necessary is because it answers the question, when should I put my hard-earned money down on the line to take a shot on a trade? So you need to qualify the trade. Those same qualifiers that form the basis of entry for your trade end up becoming your disqualifiers as well. What does that mean? So here's how disqualifiers work. When you're in the trade, create a list of the reasons you got into it to begin with. As the trade progresses, as time passes, or it moves up or down, whatever the case is, look at that list of qualifiers and try to qualify the trade again. Can you find the same 4 reasons that you liked it to begin with to get into the trade right now? So you might have gotten in 10 minutes ago, an hour ago, depending on how you trade, but would you get in right now? Can you qualify the trade again? And if you can't qualify the same trade you're in at the moment, you've technically disqualified the trade. If you can't get into it a second time, why are you still in it the first time? So now that when you have your list of qualifiers, you uncheck them. So the way you checked each one off to make sure they're there to get into the trade, you actually uncheck every one of them until you get to 2 qualifiers, 0. You have to come up with a system that works for you. For me, if I have 4 qualifiers and I lose 2 of them or half, the trade is disqualified by the reason that, hey, I don't like it enough to stay in it. I wouldn't get in the trade again. So why am I keeping my money tied up in that trade? When you're in a trade longer than you need to be, you're now no longer just banking on hope, right? You're actually giving up lost opportunity as well, which to me is more important. So that's how you go through the process of disqualifying trades. Have a checklist handy, check off what it is that you like that got you in, and then uncheck it in reverse order to find out what is going to get you out of that trade. And you'll find that you could disqualify a lot of your losing trades before the loss happens. Picture a curve. One of the curves looks like this. This is your edge or probability slipping as you stay in the trade. Picture another curve on that same XY coordinate where the graph goes up like this. That's your hope. When your edge slips and your hope exceeds the edge you have in the trade, it's an optimal time to exit. One way to quantify that is with this disqualifier list that I'm talking to you about. So give that a shot. I'd love to hear from you guys if it's a tip that you're willing to implement and what a result or outcome it's had for you. It's very important to be always qualifying trades and then always constantly disqualifying them so you could take your capital off before you incur a loss. This process is called scratching, and scratching to me is a vital part of my trading strategy. A lot of the times, if I'm able to get out at a small loss, or no loss for that matter, then I build a trust in myself, in my system, in my strategy, in my execution, that next time around I won't hesitate to enter. The problem for a lot of traders is they overthink their entries. They think too much and rely on brain power, where what's necessary is more analysis in the real time and sight. You're seeing the setup, you're not thinking about it. And so by getting out early and minimizing losses, I'm able to put trades on more frequently, and I'm able to trust myself, size up my trading, and build the kind of results that I'm looking for to sustain my career. I hope this has been helpful, guys. If you like it, please click the like button and subscribe to our channel. And when you do subscribe, be sure to hit the notifications so you're aware as soon as we come out with new content. That's all I have for you. Manage that risk, trade like a trade pro. Thank you and have a great day. Hello, and thank you for watching this video. I want to take a moment to invite you to an exclusive online trading masterclass. In this event, you're going to learn 3 key things to help take your trading to the next level. Number 1, we're going to teach you a complete price action strategy used by professional traders on a daily basis, plus give you the checklist so you know how to check off each step to qualify the opportunities. Number 2, we're going to teach you how to use advanced order flow analytics to help you qualify high probability, low risk trade setups on a daily basis. Plus, we're going to teach you how to use that order flow to disqualify the trades that you're used to taking that end up being stopped out. Number 3, we're going to show you how you can apply all of this information with a small account, because you can start small and scale up. In fact, that's the only way to start, and a lot of our traders are doing it in our community on a daily basis. This is an exclusive offer you can get online only at this event. I look forward to seeing you at this masterclass and teaching you these 3 secrets of highly profitable day trading. Take care and have a great day.